The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the March 31st terrific Tuesday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and I hope that you're off to a great start of your day. Let's make sure that you and I have a terrific Tuesday. Of course, the easiest way to do that is to always remember that what's talked about is a dream. What's envisioned? Well, what's envisioned is downright exciting. Of course, what's planned becomes possible, but what's scheduled is real. And I really want to thank you for scheduling your time with me here today. I'm grateful for your presence. Most importantly, I'm here to serve you. So feel free to dial on in, pick up that phone, call on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. You know, dialing on in, that's the next best thing to be in there. Remember, if you've got a question, somebody else has got that exact same question. So don't call in for yourself. Certainly do not call in for me. Instead, call in for somebody else. That little random act of kindness, that is the way to start your Tuesday. It's the way to start your day each and every day. Thank you for starting your day with us here at TFNN. Of course, it's terrific Tuesday. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow off 82 points, trading out of 17,895. S&P down about 8 points at 2,078. Composite off 18. Russell 2,000 down 4. The DAX off 72. The FTSE's down 95. Gold's up $1.50. Silver's up 2 pennies. Light sweet crude is back 42 cents out here. Priceline dollar-wise, lead the charge. The upside up $15. Charter Communication buying out Bright House Networks up $14. It's trying to take out a swing point with volume, and that swing point has volume out there. So a potentially very powerful move underway for Charter Communication at its all-time highs out there. Movado Group up $4. You've got Ultragenyx Pharmaceuticals up 6%, up $3 or so. To the downside, Skechers. I'm not a Skechers person, but my kids were when they were young. Skechers, that's up a couple of bucks out here. To the downside, Intercept Pharmaceuticals, kind of a wacky stock out here. That's off about $11. Science Applications, SAIC, that's down about 10%. Shire PLC off 1%, off $3. LinkedIn off $3. You've got Biogen, BIIB off $3. We'll take a look in at that. I want to see how that stock had a high volume high. So we'll see in yesterday's market whether or not it got up to those levels. All right. So where do we begin? How about yesterday? Nice trading session, was it not? The low for this next cycle is in. That took place last Thursday. The markets are going to move higher in through May 4th out here. So just fasten your seatbelt. Just get ready for the ride. Yesterday was just simply, it was a beautiful candle configuration. If we take a look at if you took a look at the Dow futures, I'll just show this one more time here, and then we'll be done with it. If we take a look at the Dow futures giving us really the best signal here of a bottom. You got this nice little hammer candle that took place. That was on Thursday. And it was in the futures contract. It did not in the cash indice. It did not form a hammer candle out there. And then what we had here yesterday's move, very beautiful because it also cemented that bottom that we took a look at on Thursday. You got this nice, what's referred to as a three-river Morningstar pattern out here. This one actually took 4 candle sessions. Most people wouldn't notice this pattern here, but you would want to notice it, and you'd want to notice it because patterns do repeat, folks. I mean, that's the beautiful thing about human nature. That's the beautiful thing about Japanese candlestick charting, because you're really trying to identify all these beautiful patterns. If you take a look, and you can see it at many different points in time inside of the Dow on its march off of the and it's March off of its March 2006 level out here. I'm just going back to a March of 2000. Well, I got to do it much quicker than that. This could get you. So we're going back to March. Well, we're not go back that far. We're going to go back to March 2009, just so I can show you that same candle pattern. In fact, we'll see it along the way as it was making bottoms. That's how important that candlestick pattern is, and that's how the markets communicate to you and I. Bulls and bears, they show up for work each day, and their responsibility is really just to go ahead and paint signals for us. Well, here's that same three-river Morningstar pattern that formed here in March of 2009. That clearly was a message to you and I about a significant low out here. We'll take a look at significant retracements on the march up. If you come back into the July 2009 timeframe, you'll see that exact pattern. Again, it's referred to as a three-river Morningstar. But hey, let's take a look at it. Whereas the March 2009 and whereas the what we'll call the March 2015 lows that were put in took 4 candle sessions, back here in July 2009, it took 5 candle sessions. Nonetheless, that was a signal and put in a nice significant bottom out here. If we're taking a look at another three-river Morningstar pattern. Let's see, you've got one right here. This is back in the, here's the actual three-river. This is back in October of 2009. That most certainly was a significant low out here. Let me see if we can find any additional ones out here that are very clear to us. Very, very clear. Where are we taking a look at it? I don't see any. There may be a couple others. There may be a couple others, but I'm not going to waste your time out there. We're just simply going to fast forward to where we're at today. So what does that set up for us? Well, what it likely sets up is the A to B equals CD to the upside. And inside the Dow, your A point is going to be the low actually back in February. Your B point is going to be the high out here in March. And your C point is going to be that low that came in last Thursday. Uno to uno, 1-to-1 A to B equals CD. That says that the Dow's target becomes 18,830. 19,170. Of course, you and I, what we know is we take a look at long-term charts here for the Dow. What the Dow needs to do now, because we've now switched over to our weekly chart. So the level that both you and I are watching to give us that nice little confirmation that the forecast that I've given you is correct. You got to see a close above this 18,291 level. Again, this is a weekly chart for the Dow. And the reason that we need to see that is, number one, because you do have a reversal signal at a level of resistance. That resistance being that horizontal line, that horizontal trading range line, which is at the 18,291 level. 18,288.63 to be exact is your resistance of this candle formation. Guess what this one is? This is the opposite of the three-river Morningstar. This is a three-river Evening Star formation type setup, as well as a key reversal, as well as a bearish engulfing. So what we really need to see, what will give you and I confirmation that the market is ready to motor on to its next level. And by the way, that next level is likely going to be 19,400 because that is the next horizontal trading range boundary line. We need to see it close above 18,291. And we'll switch back and forth here. As we take a look at each of the indices, that might be the easiest way to do that. As we come back here and take a look at the Dow, let me now put this on a monthly chart for you. Hey, the month's not over out here, but as we take a look at the month out here, one thing we know as we take a look at reversal candles, because here's the deal. When you take a look at a daily chart, when you take a look at a weekly chart, when you take a look at a monthly chart, and you got to stay inside those time frames. So monthly chart, great chart out here for those of you that are investing long-term funds, right? And in this case here, that means what takes place on a daily basis is nothing more than fodder. It's nothing more than noise out there. It's just kind of it's part of the movie out here. But you don't always have to take action. And we look for reversal signals because markets are going to move higher until the earliest possible point in time when they're going to turn is when you see some type of clear bearish reversal signal. And markets are going to move lower until you see some type of bullish reversal signal. Hey, and the Dow futures, did we see a reversal signal? Did we see a hammer? Did we see a three-river Morningstar? I believe the answer to that is yes, we did. Yes, indeed, we did. So we know on the daily, we've got a reversal signal out there at the bottom. We know we've got resistance as we took a look at that weekly, so we know what that number is, so we need to see price clear. And then on the monthly chart, as we take a look at the month of March out here, hey, no big deal. There's no reversal signal. The reversal signal, as you take a look at the monthly chart out here, that took place during the month of January. January 2015. That says that resistance is really the top of this candle out here, 18,103. So on a monthly basis, we haven't seen it close above that. I don't know that the market's going to close above the Dow's going to close above 18,103.45 today. If it did, hey, that would be another bullish sign. Does it need to close above that in order to change does that mean that it's bearish? No. It just means that it's resistance. It's like you as an athlete. It's plateaus. It's nothing more than plateaus. It doesn't matter whether you're an athlete. If you're a writer, you hit plateaus. If you are an athlete and you're playing tennis, you hit plateaus. If you're a golfer, you hit plateaus. If you're losing weight, you hit plateaus. Life is all, plateaus are nothing. No, there's basically three decision styles that each of us go through. You either decide that you're going to dabble at something, okay, or you decide that you're going to stress as you hit certain things, or you're going to decide that you're going to be a master. There's really three levels and three decision levels that each of us have as we try new endeavors out there, right? A new endeavor is something you say, hey, that looks pretty good. I want to dabble in it. There are many people out there, entrepreneurs, no question about it. You're on vacation, you walk past somebody's business, you say, I want to do that. That looks pretty easy. It looks like they're printing money. Folks, what you don't know is what you don't know. Nobody's business is really easy out there. And dabblers, they try it, they fail at first, and that's it, right? They don't try to seek anything out. What a stressor does is a stressor maybe says, hey, I know I'm going to hit a plateau. And they go out there, they find coaches, they read books, they do whatever it is that they can to try to get themselves past that next level. But boy, once they pound into that next hurdle out there, they start to stress about it. And stress is no good. Stress basically kills everything out there. The difference between the stressor and the master is masters anticipate hitting those levels of resistance. I want you to be a master of the Dow. The master of the Dow says we just have a hurdle here, 18,103.45 on the monthly chart. Once the Dow clears that, it's then also off to the races. This is Steve Rhodes with TFNN. We'll be right back, folks. Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow off 79, S&P off 7. Hey, let's go look at that index that is often overlooked. Of course, not overlooked here at TFNN. Let's go take a look at the Russell 2000. Now, the Russell 2000 is off about $4 right now. Let's go see what it is that we know about the Russell 2000. So, number one, let's start off by taking a look at the daily chart out here. We take a look at the daily chart coming off of the low back here, March the 10th. From that low, looks like the high that was put in here, the recent high was March 24th. What we know is that the retracement that it made was a nice 0.382 retracement. That was Thursday's low. Since then, it has moved higher. Nice move higher out here. So nice 0.618 retracement level. Then let's go take a look at what's going on a weekly basis. Now, on the weekly basis, well, let me change this to a monthly. I'll come back to the monthly in a moment. But we're going to go ahead. We're going to go over and take a look at our numbers. We're going to go take a look at our horizontal trading range boundary lines. Now, we take a look at the Russell 2000. And remember, the one thing I want you to understand with regard to these lines of support and resistance. In the case of the Russell 2000, the levels that actually form these barriers took place at the price points between $479 and $394. There were 30 and then 20 respective touch points that took place back then. And then just simply you take that price difference and you just simply continue to add to it in order to create the natural levels, these natural floors out here. You can see how well this works. You know, just come back the most recent level that was busted through. We saw this level get busted through again back in October of 2014. It took from October of 2014 until February of 2015 in order to basically get up to that level of 1241 out here. Now, what we saw was during the week that began March 16th, we saw price get above it. Last week, price came back and tested that 1241-ish level. Remember, we use these numbers as guidelines, not as like exact numbers out here. And what we did see is that that level has held as support. So what this says to you and I on a weekly basis is that at this stage of the game, the Russell 2000 wants to get up to that 1326. You and I also know that on a monthly basis, let's go back and take a look at the monthly chart. What the Russell 2000 wants to do is it's got a price objective of 1350. That's because of the consolidation breakout, as I pull this monthly chart back, that it broke through. That consolidation breakout, in essence, from about right here, that price point of about 850 to this price point right down here of about, what was it, about we'll call it 350 just for ease of math for me. Add 500 points to 1850, you get 1350. So there's your consolidation. We saw a clear break of that move back here in January 2013. That's how we come up with that 1350 price point objective. Now, let's look at the monthly chart. Now, there's nobody, well, I can't say there's nobody, but most people are going to argue, or they're going to state that the Russell 2000 hasn't done much here. And the reality is that it hasn't done much other than be traveling in a smaller consolidation between the 1079 and 12 area. So what is that? That's a 30-point consolidation. Add 30 points to 12. What do you get? You basically get the 1245 level. So there you go. Or I'm sorry. You get 12. No, is that 1079? 200 points. I'm going to come back and do the math. Do go ahead and subtract 1212 from 1079. I guess I could do it. It's 80. That would give us 11. So it's 120, 140. Add 140 to 1212. What's that give us? 1350. Now we got all kinds of numbers that are keying us in to 1350 because we did see another consolidation. We did see another breakout of the Russell 2000 on a monthly basis, on a daily basis, on a weekly basis, above that 1212 line out here. In fact, this month, the month that we're in here in March, price came back and tested that level. Now, with regard to bearish reversal signals, and what arguably could be kind of a weak-ish indice because it just traded sideways for so gosh darn long out there, well, guess what? That broke out of its consolidation. There's nothing bearish looking about the Russell 2000. I mean, you can't even come close to coming up with a bearish look for the Russell 2000. Totally different, and really you can't, from a candlestick standpoint, it's really what it is that I'm making that I'm having the discussion with you about. Now, let's take a look at the S&P 500. The S&P 500 on its monthly chart out here. Hey, no bearish reversal signal. The monthly on the S&P 500, it's got a consolidation pattern as well, and that says that it wants to go ahead and get up into that 1350. Its consolidation pattern basically amongst these price levels here between 680 and 1540. So, I don't know, let's call it 650 and 1550. That's 900 on top of the 1550. Shoot, forget 2350. That totals 2450 if my math serves me correctly. And in essence, that's what the S&P 500 wants to do on the longer term basis. Look, these consolidation patterns, there are beautiful things out there. You don't have to be much of a technician. All you got to do is look to see where price is consolidating within. Take that difference, add it to the consolidation break to the upside or downside. That gives you your price target out there. Esteban Rhodes, Steve Rhodes with TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 76, S&P is down 6. During the break, a question posed inside of our Tiger's Den says the following. Four ideas. Buy Apple at $125, buy IYT at 156, buy XOP at 49.50, or short the IBB at 348. And the question is, what jumps out at you as the best potential trade setup? So let's go be Lewis and Clark out here, or let's be Stevie and whatever your first name might be, and let's go do a little exploring and see if we can answer that question. Now, during the break, I was trying to take a look at, I didn't get through all of them, take a look at a couple of different charts out here. Let's take a look at XOP, because that was the first one that jumped out at me. That happened to be the Spider S&P Oil and Gas Exploration Fund out here. So let's take a look at a couple of different things. Let's first go ahead. We're going to look at it using a couple of different tools out here. So we're going to take, now this, as we can see, this thing has, and I guess what I would do is I would take the S&P Oil and Gas Exploration, and, the one thing that I would do on a chart like this, in fact, I'll do it. Let me start clean, fresh out here. That might be easiest, because certainly one of the things that you want to do, this is a monthly chart, let me get to a daily, and let's go ahead and clean this palette up, meaning so it makes it a little bit easier for you to see as you're watching us and following along on Tiger TV. Let me see if I can do that now. Style template, we want the one that says clean chart. Okay, now as we take a look at this, I'm just going to simply add the continuous contract, insert a symbol here for light sweet crude. So we got CL $F. I think I need to say equals 1 out here. Just to no, that didn't like that. I put -1. Equals 1. Oh, there we go. Now I gotta, as I'm just trying to do this here, give me a moment here. I got to come back and delete this one. I just turn it off. There we go. Okay, and let's go back and really in this case here, just looking for the correlation. That's all. So because part of that response to that question, if we take a look at the XOP, even though it's different, it's just really the influencing factor here of light sweet crude. Now, in the case of XOP, what it does show us here is this thing has begun making higher lows, right? So let's take a look at this here. here, if you come off of the low, it looks like this low might have formed out here on December 16th. Maybe it was but there's higher. Whoops. There's higher lows that are being formed out here, whether it's that low or it's the low on January 14th. Either way, whereas in the case of oil, we see that it went ahead and made lower lows out here. So maybe the correlation isn't. You still have to have the correlation there. So it's an influencing factor. It's not the factor, but it's an influencing factor, which is really what I want to pose out there. So now if we just simply go back and we take a look at the XOP, let me come back here to this tab to request. We're looking for is off the bottom, do we see any kind of sign of strength? Right? When something is making a bottom, one of the first things you want to do, right? One of the first things, if you own The Art of Timing the Trade, right? Which you should own. It's a fantastic book out there, right? It was really my first technical analysis book that I read. So it's helping us to understand volume. And what it's helping us to understand is that when bottoms are formed, what you like to see is you like to see some kind of sign of strength off of that bottom. What's the sign of strength? It's not you and I that are making those moves out there. It is some large institutions. Then what the idea is, what we learned from that book is you want to be able to buy the test of that breakout area. Well, if I look at the XOP out here, what's interesting, come on, work with me, that the sign of strength actually took place on December 17th. There was 19 million shares to the upside out there. And price came back, and it came back into that area, and it tested it with 18 million shares, 12 million shares to be specific, on January 13th. And that bottom held. So if one was going to go long the XOP, it's a pretty easy trade because your stop would be below, in my opinion, the stop would be below, let's say, the December 16th level out there. So 42.04. And the question is, do you buy it at 49.50? Well, what the XOP could be setting up here is because we've seen other signs of strength along the way. You most recently saw a sign of strength. This is looking at the daily chart, by the way. We saw a nice sign of strength here on March the 18th. Now, I think the market saw a fairly decent sign of strength on March the 18th. Many people might say that was because of Janet Yellen. Let me tell you, folks, when you go back and you look at charts and do technical analysis, you're really not going to remember what took place on those days out there. You're going to remember taking a look at the trading technical tools out here. And so you saw another nice sign of strength. Now, that sign of strength out here, again, I'm just focused on the daily chart right now. That took place at your 0.618 retracement level. So as a betting man, as a adventurous type person out here, I would say that the XOP is giving us a indication that what it wants to do is it wants to make an A to B equals CD, and that it wants to get up to the 58, 53 type level out there. Now, risk reward, does your stop have to be below that low out here of 41.63? No, it doesn't, and probably shouldn't. I would use the stop probably a close below the C point, because that is the price point here of about 47.66. So you're at 49. We're going to call it 48 versus 49. You got about $1.50 or so risk to make. You're at 50 to make $8. So $1.50 to 8, you're well above the 3 to 1. So I would say that XOP on the daily chart here is giving us some pretty decent signals that this could be this would be a trade out there. So that's on XOP. That's on the daily. If I look at the weekly chart out here, let me put that up on the screen. Now let's shift over to my one of my other tools out here. Let's take a look at the Ninja Trader charting tools out here. And here we'll go take a look at the wave count. Now, what's cool about the XOP on a weekly basis, as it was forming its top out here, formed one of Stevie's nice price relative strength divergent patterns. And as we count the moves on the waves on the way down, what we're going to find is it got down into this fifth level wave. What we've learned from Basel is that markets can reverse when you get to waves 4 through 7 out here. So the weekly chart, the cool thing about the weekly chart is you had a nice bottoming pattern right here at that fourth wave. You had that nice little bull sash candle. That's how important that same low on the daily chart that I gave you is, and as we take a look at it on the weekly. Now, here's the cool thing about the weekly chart. If our market profiles are correct, which I believe they are, right now you've got price trading above the resistance line of its TAS market profile, somewhere around the 48.45 level out here. Remember, we saw that pullback, that 0.78 or 0.618 retracement. Then we saw a nice little sign of strength out there. So the weekly chart is actually confirming that the XOP has turned into a bullish type style move out there. So the weekly says bullish, the daily says as bullish out here. And just because it's easier for me to draw trend lines and so forth, let's do one thing, because this has clearly been in a decided trend line. Let's come back and take a look at a weekly. Let's see if we can find a price channel for this. And we'll use that as maybe the last configuration on this. So as we take a look at price channels out here, I'm going to go ahead and start from that high. Now that's pretty. That's probably not the best price channel to draw. So then the question becomes, where's the next price channel? I'm going to go ahead and delete that one. No, I'm not going to start it. I'm going to come back here as price channels go from this level. And yeah, I'm not really getting a great price channel line that we can draw out here. Co-located opens and closes. What I can do is, I don't know how long the XOP has been trading, but we can come back here and take a look at our, because this data here really requires a lot of data when we identify these horizontal trading range boundary lines. So we're going to take a look at that. We're going to let the system go ahead, and this is the weekly chart. Yeah, there may not be enough. Let me go here and reconfigure this just a bit out here. Give me a moment to do this. Let's put this out here. Just trying to find some weekly numbers that we could maybe hang our hat on. Give me a moment here. Let me try this out here. Nah, I'm not going to be able to use this tool that quickly. I'll need some more time. So I don't want to waste your time doing that. So I would have to say the answer to that question, the XOP looks pretty good. So let's look at the other one, which is going to be on the short side, because it was really shorting the IBB. So let's come back, and now on the IBB, I think I've got enough data here. So IBB, which is the NASDAQ biotech, which has taken off to the moon. So let's take a look at its. Let me come back here and make one quick change. Let's take a look at its levels of horizontal support and resistance. So in the case of the IBB, what this is telling us with regard to price direction, we can see how prices clearly responded very well with inside these horizontal trading range boundary lines. I'm going to go ahead and get rid of the midpoint out here. Because the midpoint often can, but doesn't have to act as a reversal area. Just to clean this chart up here. And what the IBB is telling both you and I is got significant resistance at $375. Now remember, these price levels here inside the IBB were established between the price points of, it looks like 77.64 and probably 120.06. Those were the levels. But here's what we do know. The outcome from the short side in the IBB says you're going to find pretty good support at 332. So you're at 348 right now. So 348 minus 332, what's that? That's 16 bucks, okay? Now let's go back and take a look at the daily. So 16 bucks is likely where you're going to run into some support out there, where you'd have to probably take a look at closing out a trade. Now as we take a look at the, that's the weekly again, let's take a look at the daily, get some type of figure. So we're going to see if we can find any levels of high volume out here. And yeah, you know, you've got one right here. The IBB has got this high volume bar on the trading session. This is when the market really kind of fell apart last week at March 26th. So obviously we're going through a fluid process here. But if we take a look at the IBB, this says to me that as we take a look at that high, March 26th, which is 345.13, that had volume of 5.2 million shares. So far today, you've only done 521,000 shares on a retracement. So that says to me, forget about what that weekly level was. The IBB may be struggling to just make 333. So you're at 333. It's priced at 348. I don't recall what the weekly number was out here. You know, you're better short inside of the IBB is going to be a bounce. So let's just say that Stevie's right with regard to the market, that the market is going to go ahead and move up in through May 4th out here. The IBB is not going to go in the opposite direction. It's just, it is likely not going to be heading south while the NASDAQ composite is heading to the north level out here. So I would say you don't have enough information right now, because the question was right now, well, I got to see. The question was, let me see the exact question. I've got to go back up. Where was the short in IBB? The question was IBB at 348. You're at 348 right now. I don't think you have enough information. I think you need to wait to see what happens as the March 26 swing point gets tested, which it has not just yet. The high is 345.13. The low of today has been 347.16. I don't think we have enough information with regard to the IBB to tell us whether or not short is the the right trade. You would what you want to see is price moving into that swing point with volume. If you did that, then you would be setting up a potential A to B equals CD to the downside. So the daily gives us a potential price projection right now as we take a look at it at 311 to 300. I'm going to go back. What was the long term? Long term was interesting. The long term was at 332 mark out here. Yeah, I'm saying it's not the IBB to the short side. So even though I was asked to take a look at 4, the other 2, when I took a look at them, nothing really jumped out at me. I would still need to spend some time. But I would say to answer the question inside the Tiger's Den, what jumps out at me is along the XOP out there. And, of course, what you're looking for is you'd also like to see light sweet crude at least not tank to the south out there, because that would be a headwind. So I hope that helps. Now, the other items were, let's just take a quick peek at them and see if there is anything that jumps out at us. And that is taking a look at Apple. Now, the problem with Apple on this trading platform is it hasn't adjusted for that 7-for-1 split, I don't think. And therefore, I'm got a little bit of lack of information. But the question was, Apple, I think, long at 125 right here. Now, of course, if I'm right about the seasonal pattern inside the markets and they're going to move higher, well, look, these markets are not going to move lower. For the most part, with our move higher with Apple moving lower. So, it's sort of a trick question, right? Let's go take a look at that. By the way, I'm not a real big fan of, well, look, I don't wear a watch a whole lot. To me, it's just a piece of jewelry. Not that I don't like watches. Out there, but the commercials that Apple's been doing on the watches, they're pretty good. I think I can see where that commercial might inspire some people to go buy the watches out here. In the case of Apple, I'd say, yeah, you could go along here 125, and your stop is below your most recent swing point out here from at 121.63. That's the March 12th. So you got about a $4 risk out here inside of Apple. If we take a look at retracements inside of Apple from low to high and just this last leg, it's only done a 0.382 retracement. So if in fact this was the low that came in down here on March the 12th, quite frankly, what Apple could be doing is setting up another A to B equals CD to the upside. And in the case of Apple, quite frankly, that A to B equals CD, let's go take a look at it. That A to B equals CD pattern takes you up into a price objective of 158. Actually, going long Apple could be a better reward to risk trade than XOP as we take a look at that right now. Right now, we've got the Dow. She is trading off about, 68, 69 points. The S&P is down 5. Composite off 14. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 79, S&P is down $6-7. Composite off 16 out there. And looks like there was also another question in the den out here. I think I've got this right. How about shorting this semiconductor index, SOX out here? Let's go take a look at the SOX out here. Let's take a look at it. Now, what I've done is I've just put on this chart here. This is a daily chart for the semiconductor index. What I've done is I've just put a simple tool out here, but nonetheless, it's a simple tool that we should all pay attention to. That's this little purple line going across my screen. That purple line is the 200-day exponential moving average out here. And this takes us back into the, let's just take a look at the time frame here in 2007, October 2017, when the market started moving lower out here. You can see how that level acts as can act as a support level and or resistance level. Now, I'm just simply going to fast forward us to where we're at today. And what I want you to notice, and this is really just taking place since the nice little breakout that took place in January of 2013. And we saw that price gapped up above the 200-day exponential moving average back then. We've seen, in essence, remember, we use this kind of as a guideline. We've seen a couple of different tests of this level where prices moved down into it. It did that back in April of 2013. That set up a buying opportunity on that retracement. It did it back in August of 2013. That set up a buying area. Now, what's interesting here, as we take a look at this, remember, this is a daily chart here for the semiconductor index. It really broke through this level. I mean, broke through with conviction, a gap down and everything, and it did that back in October 10, 2014. Now, remember back in October of 2014, Steve was calling for a significant bottom in the market out here. That took place on the cash industry right around October the 15th. And price gap down through that. Now, I'm glad that somebody posted this in the den because I hadn't actually taken a look at this here for the semiconductor index, right? So as the market was making that significant bottom, which is not unusual to do in October, by the way. In fact, you want to make sure you put that in your trading arsenal out here. Here's what the semiconductor index, it actually made an island bottom reversal out here. Made an island bottom reversal. The most bullish of patterns that are out there, just like the most bearish, is the island bottom, is the island top. Can't be an island bottom, the island top reversal signal. So you've gotten one of the most bullish signals inside of the semiconductor indice out here. And price, in essence, now it hasn't come down and hit exactly at the 200-day. It came back here in this last pullback in February, as well as the one last week, March 26th, last Thursday. Price came back and tested that level. So with regard to a short inside of the S&P, I would say last Thursday was your signal as to a long, inside, not the S&P, inside of the semiconductor index, not a short. You really, now that doesn't mean that you can't sell from the top. That doesn't mean that somehow doesn't blow through this 200-day moving average. But at this stage here of the game, you tell me, since January of 2013, if we've seen any bearish signals. Folks, there is nothing more bullish than a failed bearish signal out here. Well, when the semiconductor index gapped down as it did back on October 13th, but then went ahead, and that was a bearish signal, and that failed, and it failed like as poorly as you possibly can. And how was that? It created that island bottom reversal inside the semiconductor index out here. So last Thursday's move down into it, that was a buying opportunity. Of course, it always depends on your trading time frames that you're looking at out here. The question with regard to whether it's a short or not, maybe somebody's trading on a 30-minute chart or something like that. I'm looking and giving you a longer term perspective out there. So folks, thanks so much for joining us here. Stay tuned. Our man Basil Chapman, he's going to be up next. Let's go ride a wave or two with Basil. Then we got the options hour. We've got Daryl Martin, David White, the Tom O'Brien show, and then of course Andy Heck. He'll go ahead and take it on home for us. Have a great Tuesday, folks. Look forward to seeing you tomorrow morning. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.